That was quick. Hello, welcome back to Fintech and Insurtech Live. We've just had a really interesting session with Jonathan from Santander about the future of open banking and about the potential of open banking. And that's led in quite nicely to a panel discussion. Now, normally when we do panel discussions at these shows, it's relatively closed. I ask some questions, they answer, and then everyone goes away happy. Considering there were some twitchy hands when I offered questions there, it made sense to bring Zita on and have it as a group panel discussion. It made more sense to me. So what we'll do is I will open the floor to questions. We'll pass the microphone around. I know that feels overkill because it's not the biggest room in the world, but there are about 1,000 people watching online who would like to hear as well. So we will invite people to talk. But first, if you'd like to join us back on stage, please, Jonathan. Thank you very much. And Zita as well. So just so everyone knows entirely what's going on and who's on stage, my name's Ross. I'm the marketing director of BizClick Media Group, and we are the company that published Fintech and Insurtech magazines. I am one of the resident geeks in the office as well, which is why I was asked to come and do this one. Jonathan is head of digital for corporate and commercial banking at Santander, and we know he knows what he's talking about because you've just heard it, and hopefully you heard Zita's speech earlier as well. So Zita McMillan is the CEO of Predictive Black, so welcome to the stage.
Thank you.
Thank you. So we've just discussed about the future benefits of open banking and unlocking what that might look like, which is inevitably going to lead into a conversation about partnerships and how important it is that different organizations actively work together rather than just making some data available and saying, go on, have at it, because there's probably far more potential for customers if we all work together and get on a little bit. But no doubt we'll cover that topic. Is there anyone who'd like to open an initial question in the room? Yeah, in this corner here. So please can we pass a microphone down? I don't know, there we go. Please can we pass the microphone down to this corner?
Hey folks, so I'm Will, one of the co-founders at AppTap, and we're actually a TPP of sorts. So we're aggregating people's data and trying to help them manage and switch their bills. So it's really a question of, in opening up, you mentioned transactional data is very expensive for these financial institutions. What would be your advice for someone like myself who's going to the likes of the BTs, the Skies, the British Gases of the world, to say to them, hey, we want you to open up your data as well so that we can bring a more comprehensive experience to customers? How would you approach that conversation?
Probably write to Boris Johnson and try and compel him. Yeah, look, as I say, I think without regulatory pressure, it's unlikely that people are going to share these things willingly. However, you have got one example in the US, right, where Plaid essentially went to every single bank and did integrations on a bespoke basis and created a value play and a value interchange with those institutions that was worth it, and created, basically an open banking infrastructure for themselves without doing it. So it is possible to do, but the incentives and those deals, it's going to take 10 years of groundwork, right, to get all the major players covered, and the nature of those deals is going to be different every single time. I think for these things to be truly democratized, they probably have to come with some regulatory compulsion, and I think it's quite likely that we will head in that direction. I think GDPR and equivalent regulation is about saying this is your data and you can decide what you do with it and how you can control it. And I see no reason why that wouldn't extend more generally to mean that you can permission and move your data around generally. We had this principle with, you can move your phone number, right? For example, with, Monopoly that we had with British Telecom in the UK. And then we had that principle extended into mobile phone networks. In banking, we've talked about, moving sort code and account numbers. That's really difficult for a variety of reasons. But you can see that from that seed, right, the principle of controlling your data, controlling your profile, controlling your ability to port around is a key competitive principle, and I think has to start applying it across as many industries as possible. If we're going to have a digital economy that is fair and equal and easy, right?
Sorry, just before you answer that for people watching on the stream, so just a reminder, Jonathan works for Santander, and the question was, what are the benefits for you as a bank of actively buying into open banking?
Yeah, well, I mean, do you want to take this because
Yeah,
you're offering value on that data?
I would encourage you to not just write to Boris Johnson, but read the Ofcom consultation about open communication. There you go. So I think there is moves afoot, and actually that's brilliant. And the idea of open data per se is something that, you know, we are, financial services, I'm going to use the word embraced. Clearly we didn't embrace it. Clearly the banks hate it, and, you know, I'm sure Santander is very different. But, you know, the reason why it took so long is because there was no value proposition to them, as you say. There wasn't the kind of deep-rooted what's in it for me. It was very much, I'm going to give you the keys to Aladdin's cave. Are you crazy? Why would I do that? So I think from a regulatory body perspective, they should learn the lessons of how the financial services industry and banks in particular embraced the change, and then see what we've all done with it, because I think there is such a vast consumer benefit and SME benefit for opening up data that hopefully for the next sector that goes, and let's hope it's communication because it really ought to be, it should be faster, it should be smoother, but I would never underestimate a large organisation's resistance to change.
Before we take the next question, would you like to kind of introduce Predictive Black to people who aren't necessarily aware of it? Because I think that's probably relatively important to why you're answering these questions.
So we're part of the open banking community. We take open banking data and open accounting data, and we connect that to people, their sector data, to create predictive cash flow forecasts. So I'm going to hit up Jonathan and tell him my software is better than his after this. That'll be a good one over a birthday beer.
Thank you. Sounds good.
I think there was a question just in front of this sign here. Yeah.
Hi, thank you for taking my question. So I'm from the European market, so in Europe we're a bit behind the UK in terms of open banking. One of the things that we're feeling is the user experience is so bad at the moment that we're not seeing particularly high growth rates. How is that happening in the UK, and what is happening in terms of user experience here?
Yeah, so as I said in my speech, user experience is a problem. In payments, it means authenticating every single time, unless you're setting up a standing order in which you can authenticate once to set up a recurring payment at the same amount. You can do a wide variety of different payments now in open banking, which I think is good. And variable recurring payments coming next year is going to be provide a lot of more opportunity in sweeping to an account that is your own, and if that account is your own, which is your own virtual account with a merchant, then potentially there's the opportunity to create some really interesting purchasing experiences there, which are much smoother. I think the speed and performance of the APIs across the industry probably could do with improving, and there was lots of compulsion about what the APIs can do, but about how they run and how they perform. I think particularly after open banking, it potentially ceases to exist after it's delivered its mandate. I think the monitoring of that and the pressure to do that, I think, is an important dynamic that if we're going to be able to take advantage of it, particularly as a sort of scale competitor, scale challenger bank like Santander, we've got a vested interest in having access to our competitors' banking data, and so we can lend and offer other value-add services to those customers. And so we need the APIs working. I think unless the institutions are able to offer premium APIs, and there's a sort of upside in being a great API provider that's got high uptime and great responsiveness and a great experience, we see the fraud journeys, for example, differ quite dramatically in each bank's approval journey for an open banking payment. I think unless there's more push around making that optimized and standardized, we might struggle to see customer experiences be what they could be, which is why I talked about the opportunity of closed loop systems becoming the means by which that's achieved. And that would be a real shame given how far we've gone with the infrastructure and how much opportunity there is for the banks to continue to be the most relevant financial service, most trusted, safest, best position to have the most capital efficient offerings, right? The banks are definitely in the driving seat of that. And they can take advantage of it, but there's got to be a sort of collective will to go the final step.
I think I would add that the regulation that enabled open banking went so far, and then there is a reliance on the industry itself doing the right thing. And actually, I think what we're seeing, the grit in the system, is both caused by some of the heavy lifting in the regulation. So the consent process inevitably causes grit in the system, and some would argue that's a good thing, and some would argue it's a bad thing. Take your choice. I think the challenge is that if you're not regulating it to a sense of, you know, how compliant are you going above and beyond the basics, then there's no real incentive. And I think that's why Jonathan's thought around the premium APIs may be where we get to, on the basis that there has to be something in it for the firms to enable it. So, you know, it's almost great for Europe to be slightly behind, because you get to look at all the stuff we haven't done quite so well and say, well, we're not going to make that mistake, you know, and actually we're going to get there faster and better. I think possibly North America might do that before us, even though they don't have the regulation yet, actually. I think they have a more customer-centric view of the services, and that will lead to a slightly different playing field. But yeah, you guys still have a great opportunity to do better than we have.
Thank you.
We'll come to that question in just a second. It's the man in the jumper just here. Zita, you just said that in some sense there's a reliance on the industry to do the right thing, that or regulation. I'm not sure that anyone can even decide what the right thing is, let alone do the right thing. And there will be a lot of people that would argue more regulation just drives up costs. Those costs have to end up somewhere, and it's not going to be on the banks ultimately. So is there actually, so we're just talking about Europe and what they can do, is there a realistic one-size-fits-all solution, or is it an ongoing discussion and there just isn't an answer yet?
I don't think there ever can be a one-size-fits-all, actually. So what I might need from open banking data to service, you know, B2B customers will be very different to what a consumer open banking data provider might need to be. So you can't quite grapple a one-size-fits-all approach. And I think, you know, the systems you're dealing with in banks and the kind of the digital journeys they're on, again, that's quite different. So I don't think there can be a one-size-fits-all. I do think, however, and I worked at the FCA for a little while, so I have a little bias. I quite like a bit of regulation. I do think where good regulation can enhance what firms do, that's great. And whether that's the kind of additional reporting, you know, we'll see it transform how we report in ESG, and there was a great session earlier on that. You know, I think actually going beyond just basic compliance through to this is important to your client base and here's how we'd like to monitor it will engender a little bit more possibly proactive compliance.
But I like home cinema and audio-visual stuff. There's a lot of cameras around here today, and I think about those industries, right? VHS versus Betamax, HD DVD versus Blu-ray, you know, mini disc versus MP3 files stored in another way, having hard disk drives, or, you know, eventually the market does work things out if there's a reason to, right? And there was a collective need to have a standard in those industries. And even HDMI, we've got HDMI on the screen in front of us, you know, that's on version 2.2. You can see I'm a geek now, right? And it's gone through so many iterations and so many different standards that as it's evolved, and lots of, it's not backwards compatible. But the industry came together to create one plug that could do all audio and video. And eventually they got there, right? Yeah. After lots of iterations. And eventually industries will get there if there's a reason to. And I think, you know, open banking providers, I think banks themselves, the whole ecosystem, and as we bring other data from other industries in, if we can show that it's in the collective industries, you know, impetus must do because the value is so great, then eventually people will, you know, get around the table and talk, right, well, how do we make this work properly? Which is exactly, you know, there's a body that meets to discuss the HDMI standards, right? And we could have the same thing on our own volition in the banking industry if people are benefiting from it.
Bringing other industries in, possibly a point that someone will ask a question about, because obviously finance runs the world but doesn't run all of the world, so data from other places could be relatively helpful. There's a person in a jumper here who had a question.
Hi Jonathan, I'm Tom from Comma. So we're a TPP, so we work with Santander and a number of other banks. We're a payments provider. I just really wanted to pick up on the point that you made about, you know, open banking being a threat to traditional institutions. And I want to kind of, you know, understand kind of how you don't see this as an opportunity, because, you know, from my mind, as a product person, as a founder, as someone that works in technology, if you try to suit kind of every single use case for every consumer, for every business that's out there, and try to build this kind of Uber app, which, like, you know, does every single thing, then, you know, you never get there, and you never can quite suit every single case. And if you look at, you know, Apple, like at Google, at even the accounting systems like Intuit, like Xero, all of these companies have, you know, ecosystems for third parties, and they have great APIs and things that you can kind of really get into the you know, depths of the product with, and that means you can suit all of these different cases that are out there. And without that, you'd be left behind because someone else would do it, or some other bank would kind of be, you know, get ahead of the game.
Yeah.
So don't you see that, like, creating these APIs and these third-party ecosystems as an opportunity to keep yourself relevant and to really win the game.
Yeah, that's definitely the way I see it personally, just speaking individually. In my speech, I talked about it being a threat or an opportunity, and that discussion is going on in banks, and it most definitely is, as it has done, once they got their head around what it was they were being asked to implement. I think if you take Xero's platform, they charge for data that's actually their customers' data, but they charge for access for that data via their API on their marketplace. If you take Apple Pay sitting on top of the card pay infrastructure, the merchant acquirer and the card issuer and the scheme, all those three parties are still getting paid even when Apple Pay sits on top of it. And I don't think Apple Pay would go to those providers and say, can you provide all this infrastructure that runs this whole payment and clearing system and do it for free, please? They wouldn't agree to that, right? And so we've built this infrastructure around open banking that expects the banks to do the KYC and to share it and to do the payment and not to charge for it, et cetera, et cetera. There's a lot of obligation on the banks without any return going in their direction. So I think it definitely is an opportunity, but I think it's in order to continue to provide the momentum, there's probably got to be a financial incentive to run the infrastructure as well as to provide the value-added services. But I wholeheartedly believe in the value-added services on top of it. But I think we will come a cropper where a closed-loop system can take financial services away from the banks if we make open banking bad. And the only way we're going to make open banking good is to sustain it beyond the regulation with its own economic momentum that works.
Just touching on that point for a little bit, I understand the KYC burden, like having opened an account, business account, Santander.
Yeah.
I understand that the cost of that process must involve from your side must be enormous per customer, and that is absolutely something that needs to be solved. It is a ongoing problem that affects every bank and the people that are trying to open accounts as well. But in terms of transactions though, like consumer accounts, they don't get paid. They don't get charged per transaction, but businesses do, and that is still something which is there. So do you see that, you think that there's, Xero does, for example, charge extra money for payment services on top of that? Is that something that
I think
consideration?
This is personal speculation now because I don't work in retail banking and I don't set the strategy of the bank overall. But look, it's a low interest rate environment, right? The normal economics of banking doesn't work in this model, and loans as they come off and mature and are coming back onto the books at a price that's very different to what they have been on the books, and that margin thins. And banks are going to consider what other ways they can make revenue from the assets that they've got and the services and the infrastructure they provide. And so I think these questions have to be asked. And as I say, I think in order to create the opportunity and the best service of these things, they have to be a service, not just this burden that you have to do on the side. I think whenever you're looking at anything, the ESG agenda, if you incentivize people to do the right thing, or that it's easier or better to do the right thing than it is to do the wrong thing, or trying to penalize people for doing the wrong thing, or you try and make them shift their behavior in some other way, you tend to get worse results. And so I think existentially we're going to have to face that question and come to terms with it. But the economics of the industry and how we value a customer, or indeed our infrastructure, or indeed KYC, is going to have to be part of the answer.
Thank you.
I would just add though, as a TPP, and I'm a user of open banking, and I then sell my service on, it is a bit, and it's going to be sort of a little bit heretic to say this, it's a little bit unbalanced right now, isn't it? So my base expectation is that when I pull data from the banks, I get the data back. Thank you very much. And then I go and make a profit from the data they have very kindly sent me. And so it does feel a little bit unbalanced. And I do think there has to be a rebalancing of the ecosystem as we mature that says it was fine. The banks all got kind of beaten with a big stick to say, you must do this, and you've held on to this data, and we don't think you're going to do it unless we regulate you, and stick. But to Jonathan's point, there's got to be an incentive thereafter, and the economic structure of the system has to reflect the cost burden on the provider, and that would be a normal thing to happen in any industry. So, roll forward a few years, I would be absolutely amazed if we're not paying a significant amount more. Not that I want to, my CFO is probably going to kill me when he watches this. But we as the beneficiaries, of pulling that data, there has to be a sort of economic value to the banks to send it to us. So I do think that has to change. I think we need to be a bit more open-minded about who bears the burden, where the cost lies, and what we should pay for it, actually, to provide our services. I don't think that's a bad conversation to have.
And those conversations, as you know, as a TPP, are already starting to kind of circulate. Like it's you know, those conversations happen. But then there's always this question of like the data itself. You know, whose data is it, and is that something that the bank should charge for?
But a consumer can't give it to us without the bank.
That's
a
true.
business can't necessarily provide, well, they can send us their statements. So the intermediation of that data has a value and a price. And I think, you know, we've all benefited. My business wouldn't exist, or it might exist in a sort of slightly weird sort of way without the open banking availability. And as the maturity of the sector takes hold of all of us, we have to have a slightly different conversation about where the cost burden falls. I just think that's inevitable.
And you know, to your point about free transactions on personal accounts, well, in America, you know, people pay for their transactions on their personal accounts, and they have a different interest rate to reflect that they get paid. So, you know, there's always a quid pro quo as to where the cost lies, right, at some point.
There are lots of questions flying in around data protection, and that's something that I think people in this room are very likely to understand. They've come here, obviously, we have a room full of experts here. But should people be worried? We're talking about sharing data between organizations. I don't even like sharing passwords. Should people be worried?
Never share your
password. Never share your password, I would say. Don't, if people are phoning you up and say, don't do that. Look, I mean, it's an encrypted service. Security is a big concern. Everyone takes it incredibly seriously. It's written into the protocols of open banking. I think that will need to continue to evolve, and we've already seen some TPP, journeys have some fraud around them. They tend to be the same thing, that they're persuading people to do something that they probably know, no cold light of day they shouldn't be doing, or it would be a bad idea to do. But yeah, it's definitely a concern, and we have to stay live and alert to it all the time.
So you take data and you do something with it, which you're welcome to discuss, and then you make money on it and you pass it on. At what point do you have to ask permission to do all this?
All the time. So you've got the consent process, and on our dashboards it says how many days left of your current consent, so when you'll need to re-consent to it. So, and I think that is important, actually. Even though it causes me a little bit of a logistical headache, it's important that the user knows that at any point they can stop me getting that data. Because it's not mine, it's theirs. And actually, as a person who shares my own data with people, slightly through gritted teeth, which with no sense of irony, I want to be able to say yes, and I want to be able to say no when I want to say no, and I want to have that control. And even though it causes friction in the journey, I think that's okay, and I think we should all get comfortable with that degree of friction, because if you just randomly consent and then thereafter you've got no control, that can't be a good thing.
Yeah. I'm interested in cross-border opportunities, and I'm sure we can come to that. But you two are getting on fine. I've seen you talking over by the water cooler. There's some talk of a beer later. How much currently are different organisations actually talking and working together? Or is this, banks have been told to do something, you've got an opportunity to make some money, you're really keen, the banks aren't really that bothered. How much collaboration is there at the moment?
I think from my perspective, there's a lot, actually. So it's not hard to start a conversation with a bank. I mean, it's not necessarily easy then to convert that into a commercial relationship, because the time it takes. But I think there is a genuine sense of, actually, there may be things that these other companies are doing that we could align ourselves around, or the chap from Synergy said earlier, I can just buy that service in, I don't have to build it for myself. I think that the challenge when you're a smaller player is that you run into a process that you either forgot existed or you just never really encountered before, and it's hard work. So, we're all running at, whatever speed, and the banks are kind of going, all right, well, hang on, let me have a look at you. We've got obligations, we've got duties. So I think there is this sense of, maybe misalignment of expectations sometimes, but it's not difficult to have a conversation. And in my experience with pretty much all the banks I've spoken to is there's some great people interested in doing the right thing for their customers, and you need to find the right people to have that conversation with.
Is there anybody else in the room who's got a question? Time is kind of rapidly running out, so I don't want to miss anybody. No, maybe there'll be some more hands flying up relatively soon. So I do not work in banking. I am a marketer. I am a nerd, so I'm aware of a few things. But this all sounds very UK-centric to me, and we've talked about America have got opportunities. Europe are having a discussion at the moment. As the world becomes smaller, admittedly not physically, how much of an opportunity is there for open banking to really be cross-border and go global?
Yeah, I think this is a really important question. You've seen PSD2 go so far in Europe, and obviously that built on PSD1, which created SEPA in Europe, and that has a one-day clearing cycle, whereas our implementation of PSD1 in the UK has faster payments, 15-second latest, slowest clearing cycle. PSD2, because of open banking going ahead of it, didn't need to be implemented in the UK in the same way, although it brought other obligations. But I think in Scandinavia, you've seen those nations agree independently of PSD2 to create a multi-currency gross real-time settlement payment system there. And I think that's a direction that can happen in other places. Obviously, the banks have got a relationship with the Bank of International Settlements and SWIFT and other organizations like that. But I think with blockchain, if we can get it energy efficient or we can get it transaction speed right, there's definitely the opportunity to create a multi-currency clearing system that's faster and more efficient and optimal in a sort of globalized world, whatever that means post-pandemic. I think there's definite opportunities there, and I think it has to start with regional communities setting that template, and Scandinavia's, as with many things, is a really, really good example of that. And I think there's no reason now with technology why that can't be possible. Low margin foreign exchange that's instantly settled.
I think there has to be a political will to do it as well, actually. So, I spend a lot of time talking to American smaller institutions in the US, and some of them get it, some of them look across the pond and go, you're all absolutely mad, why would I do that? But once they see a value proposition to them, that's a really different conversation. So whereas we have benefited from this unilateral stick, they haven't got quite the same process in the US, and state by state you might get a different experience, and Canada's doing something slightly different. So I think there will be inbuilt complexity to try and do anything global, and I think it's almost incumbent on us as people who have got a system already to go out and one of the speakers earlier said about evangelizing and actually make it sound like a great thing. You're missing out if you don't, and people then are a bit more open-minded, but I think that will take some time, actually. And I think, interestingly, it'll be the mechanics of the system that get there first, the kind of unglamorous stuff. I think the super glamorous, here's an app to manage and track your, spending on beer at Jonathan's birthday, that's going to take a little bit longer.
Yeah, well, we're spending for the beer today. Yeah. So you don't have to track that one too much. So you mentioned blockchain. We could get lost down a hole there. I'm sure you definitely could, actually. But if we're in a kind of a KYC era, and that's obviously incredibly important, is that not the opposite of blockchain?
I don't think so. The authentication in smart contracts and the idea of a bit of data moving and an authentication moving at the same time a transaction takes place is the heart of what blockchain can unlock. And there's all sorts of types of transactions that can have multiple bits of data and authentications going either way before a transaction takes place. And I think that being public or less public, depending on the nature of what the transaction is, for different use cases, be those medical or be those property purchase or a welfare payment. You can imagine all these things happening and recorded on the blockchain with authentication taking place. I think those are the best use cases of what blockchain could be. We haven't seen any of them really come to fruition at scale yet, but it's what the promise holds, right? Yeah.
I think the challenge is a little bit that it doesn't sound particularly user-friendly. So for anyone not in the know, it actually is a little bit of an intimidating place to start. Or you hear stories, and I know friends of mine who are not in this world, and they're like, crypto? That sounds bad. That's not a great thing, is it? And then you end up trying to explain something. Actually, you're not. It's not your area anyway. But I think part of the challenge for us inside the industry is finding a way to make it sound less scary to people who will ultimately be a beneficiary of it. They just don't necessarily need to know. I don't need to know what my catalytic converter does. I'm not even sure if my car has one, by the way, but it's a thing. I don't need to understand how it works. I think partly we're all a little bit too nerdy for our own good, and we're so happy to tell people, well, it works like this. No, just stop explaining quite so much. Show them what it can do for them. It's the classic comedian, don't tell me you're funny, tell me a joke. that's where I think we probably are missing a little bit. We're too into the techie detail of it. Sorry.
No, I think it's 100% right. I think once you get use cases right, you don't need to explain, right?
Yeah.
Once you show someone, you don't need to explain. So,
Yeah.
and people don't care, nor do they need to probably
exactly.
care. They need to have, that their data is permissionable and manageable. They need to know that they're safe. But those things should be prerequisites in a regulated industry like ours, where we're acting responsibly, right?
Yeah,
There's a hand up over there, Ross. Sorry.
Oh, sorry. Please can we pass a microphone down to that side of the room? I'm willing to run over by about 5 minutes if you are.
Sure.
I'll be shouted at.
It's only Jonathan's beer that you're delaying. So.
Hi, myself Dave. I'm from the Fintech Global. So, yeah, means the other things is that people don't understand the blockchain and cryptos difference, because blockchain is not about just cryptos, but you can also use the fiat currency. Nobody is going to stop you to use fiat currency, because we build a blockchain using the Hyperledger, and we know there is no restrictions between the using cryptocurrency or fiat currency, right? So you can build your private blockchain or public blockchain depending upon your business model. If you want to do a B2B payment, you can definitely do the private blockchain. If you want to do a P2P payment, where you can do a public blockchain, right? So, it's more of to understand people to know about the blockchains, because a lot of people think blockchains means crypto, blockchains means, but that's not correct, because, if you build a blockchain, you make sure the transactions are immediate and real time and secure. There is no connection between the blockchains and the cryptos, right? Crypto is good to use the blockchains because you don't need to depend on the bank and real currency, and it could be anybody can use the different currency, because if you have one currency and then you have a FX rate transactions and all those things, but the best thing is crypto. You don't have to pay the FX and all those stuff, right? So means it takes time, but I think it's not like people don't want to use the blockchain or something, but I think the big blockchain will be the next things to working on to secure banking platform without depending upon the scheme, faster payments, or schemes down or schemes not scalable, or that's the things we are looking for, seeing last 10 to 15 years, that schemes are down, schemes are not scalable, schemes is not taking that much volume of that, and the blockchain will be able to solve those kind of traditional problem.
I think there's no doubt that the future of core banking and payments includes some sort of distributed ledger technology. I think that's going to happen at some point. We've got to get it right. But there's no doubt that that will be the basis of it.
Yeah, thanks so much.
Great. Is there anybody else in the room who's got a question or comment they'd like to make? I would urge people to have conversations in the networking area. If you're watching on the stream, that's okay. There's kind of virtual networking as well. Zita did a really interesting session earlier. If you did not see it, please watch it. It will be available. If you're in the room, you've already got a login, I assume, on the app, Brella it's called, and you'll be able to go back and watch that on demand. It is worth a watch. Thank you both very much for coming and joining us on your birthday as well. Really quite something. Hopefully the end of maternity leave is not looming too close. Is today your last day?
No, it's tomorrow. Yeah. I'm back at work, so
Wow, okay.
yeah. Sleepless nights and work. We'll see what it holds.
Zita, thank you very much as well.
Thank you.
Thank you.
We will go and get a beer. This has been a really fun session. Thank you, everybody.